What's up, guys? Thank you for stepping into Agartha. And in this video, we're going to go over the basics of investing and why we invest. So let's jump into a synopsis. Before you invest, you should always know that there's always a risk of losing your money when investing. And you should never invest what you can afford to lose. And that's so true, because you invest what you can afford to lose, now you're emotional, because you can't afford to lose the money. So emotions is a money killer. That's why you invest with house money, play money, because you can afford to lose it, and you're able to make sound decisions because you have a clear head, you're unbiased, you're unemotional. When you're investing too much, or you're investing money you can't afford to lose, then you're way more emotional and it's harder to make clear, sound decisions. You're likelier to not be able to handle when the prices fall down too low, and you may sell at a bottom. And that's why when you're investing too much money that you can't afford to lose, you get scared out of positions like that. Being able to have the mindset to manage and stomach those volatile moves and drawdowns that may cause you a little discomfort, as well as not investing too much, will give you that stomach and that level-headedness to be able to manage this market and invest with no emotion and really play this to a T. The most common reason that we invest is to retire. We don't want to work all of our lives. We want to save money and we want to invest it to have it work for us and grow it, where our money is now working 24/7, 365, and our money is growing not from the time and hours that we directly put in to grow our money, but our money is growing based off of just itself. So that is why we invest. Think about it like that. We want our money to work for us. We want it to grow and multiply and compound and grow out. Where if we save, it's really just there's no multiplying and saving our money. We saw inflation. We saw that we're actually losing our purchasing power. It's very key to understand, if we're looking to retire, we need to invest our money. We need to be making more than the inflation rate of the year to maintain our purchasing power. But the overall goal is to increase our purchasing power. So we want to be making more than what the inflation rate is. And the bigger the better, so we can get to our retirement goals faster. So it's a great idea to invest, especially if you don't have a retirement plan and you're reaching a certain age where you may think you have to work for the rest of your life. Cryptocurrencies may be your way out, because the way that they move, you can make 100 times your money in 3 years. And that is, depending on how much you put in, retirement money in a short amount of time.
If you're new to crypto, or if you've been in crypto for a while and you still don't feel like you have a strategy, then we have the perfect thing for you, because it's one thing to have a strategy, but it's another thing to automate that strategy. So what we're doing right now is a waterfall flash sale. This is the start of week 1. We just launched our Stargate automated experience, which gives you access to utilize our custom automatic trading bots that we built for XRP, XLM, HBAR, Algorand, and a bunch of other altcoins. If you're sick and tired of watching the charts every single day, worrying, stressing, guessing about prices and if it's going to go up or down, then look no further than this, because this is the holy grail for any crypto holder or trader.
Another reason we invest is to generate more wealth, to do things that we like to do, passions, hobbies. We want to have that freedom. We want that money to be able to provide things for our kids or our spouse, our family or friends, or ourselves that we could never provide for ourselves before, or things we wanted to do that we couldn't because of money restrictions. So why we invest is so we can grow our kind of freedom tickets to be able to do the things that we want to do and how we want to spend those freedom tickets. So the third most common reason to invest is to hedge inflation. We may not be looking to invest our money to grow it and gain more wealth and do other things. We might have to invest our money just to safeguard or preserve our wealth. So that's another reason why we invest. And with inflation at a rate of 6%, your money is in a savings account with an interest rate that is less than the rate of inflation. And you're technically losing money because you're losing your buying and purchasing power. So it's like a silent robber, that inflation. It's a silent robber because you don't know you're losing your money because it looks the same. It's just your purchasing power. Everything else around you costs more to get. So that is how, and that is why we invest, to avoid silently losing our purchasing power. But now we're aware of it, and now we know what to do about it. Invest. Investing is defined as the act of committing money, or sometimes called capital, to an endeavor with the expectation of obtaining an additional income or profit. We're investing our money to obviously make more money. Unlike consuming, where you're purchasing, say, new shoes or you're purchasing a new TV, investing earmarks money for the future, hoping that it will grow over time. So you're basically buying more money in the future, in a sense. It's not guaranteed, let me tell you that. We're making educated statistical bets to buying something that will potentially be worth more money in the future. And however, investing comes with risk of losses. Like I said, you want to make sure you're picking something good and you're doing your research and you're getting educated on it. Because if you're not, you could pick something that's bad and you have a higher risk of losing that money. And that investment is not really an investment, it's a cash pit. And then investing in the stock market is the most common way for beginners to gain investment experience. And the reason why you should invest is to generate more income or for a retirement plan. And investments may include a range of choices, including cryptos, stocks, bonds, mutual funds, exchange traded funds, and real estate. An individual's investment goals depends on their income, age, risk tolerance, and so many more things. Your hobbies, your passions, what you want to do in life, your goals, your desires, your dreams. That is why we invest, to be able to get or provide those things that we never had, or things that we desire, or just things that we want to provide for other people, or good things we want to do for them, or things that we wanted to do for ourselves that we could never without having money. But investing is going to give us that extra cash flow or that retirement to be able to get that time back, where we don't have to spend it directly into gaining more money through hours at work. But now we have autonomous 24/7 kind of system where investing, we're compounding the money, and we're using that to have a better and kind of overall more life experience. So that is the basics of investing, and that's why we invest. In the next video, we go over those different types of asset classes and what their definitions are. So I'll see you in that one.
Are you sick and tired of just stressing and guessing, holding and hoping, and watching the crypto market go through its ups and downs and not doing anything about it? If you're someone in that position, then look no further than the Stargate automated experience. We just launched it and we built custom automated trading bots for XRP, XLM, HBAR, and a bunch of other utility coins. If that sounds of interest to you and you want to learn more, click the video below and I'll see you over there.